Hi, this is Jay Norris, author of Mastering the Currency Market and host of Live Market Exercise at Clovernest.com. Welcome to the report. Before we get into it, I need to remind you that trading futures and forex is a risky endeavor and not suitable for all investors. The charts we're going to be looking at momentarily are real-time market snapshots and may not be replicated going forward. First market, the Australian U.S. dollar. Aussie USD, it's in that big pennant that you could see. That's actually highlighting the 2-month pennant. It looks like it's in about a 5-month pennant also. Larger pennant outside of that, well, a rising wedge. So you got a pennant inside of a rising wedge. I've been saying the last couple of days, count me amongst the bulls. I was on this market like a bloodhound the last couple of days, and I was studying. I was looking for a buy setup. I was very mindful of the short-term price pattern, very mindful of short-term structure, and I didn't get what I was looking for, so there was nothing to do. But in the big picture, I guess I just have to chalk that up to, everyone's waiting on the big number Friday. But on the other hand, it has not been acting like a bull lately. So I have to say I have to step off of this guy right now. But, if it gives me what I want tomorrow, I'll be right back on there. It's a trader's job to be objective. So, it's rare when I'll step out and say, count me amongst the bulls. That I was one of them, but it's not acting like that. So it's got to give us something. It's got to put up or back off. Something else that's concerning me, too, is higher U.S. interest rates, and we'll get to that in a minute. But Australian U.S. dollar, it wasn't giving me what I was looking for, so a little disappointed. Now, here's the market that did, though. The euro-U.S. dollar, big movement. Today was a day of bullish U.S. economic releases. As pretty as this looks, and as bulled up as we've been on this market, all week in our live market exercise, and really, for the past several weeks here in the exercise, it looks pretty, but it wasn't all that easy, given the bulk of that move came on one big number. And, I shouldn't say give all the credit to USISM. Obviously, it was, you had a pretty bullish statement, pretty hawkish statement coming out of the ECB, and that was the bulk of it. But it is impressive that the market held its gains. It was actually pretty impressive that you had a late afternoon rally in the U.S. session, too. So you were still able to make some money, but it was late in the session for sure. But that's good. It's acting like a bull. So, hey, short-term trend up on the weekly, short-term trend up on the daily. You have a lot of room between here and the November high. 140 could be a sticking point just because it's a double figure like that. Next market, the pound. The pound had that one close above the monthly figure, our monthly directional line, and I've been saying, well, you need two. You need 3 closes above a significant level like that. You're going to need 3 closes above it to sell me on it. You've only had one. So you had 1 out of 3. It's been above that level several times, which is right around 63 even. 63 the figure. You've been up there 3 times. You could only get above it once. It's still pretty bullish. In the back of my head, though, I'm concerned about interest rates. The big question is, are the bunds and the gilts going down like the U.S. Treasury bonds are? And that's going to be the big question. For now, though, I'm still bullish here. I still like these majors. I'm fascinated. However, they've got to bust a move, so to speak. Here, we have to see if they're going to do it. They've got to do it now. So let's move on to dollar CAD. Well, I shouldn't say they have to do it now. I should never try to tell the market what it's going to do, right? That makes me look foolish. Dollar CAD, nothing going on here. It's down on the monthly, down on the weekly, down on the daily. There was a possibility for a short covering rally. There's always a possibility of a short covering rally, especially you get closer to the end of the week where we're at now. However, you're not getting it. So I think overall we're looking for 95 here. 95th Street and dollar CAD. Next market, the Chief. That's a little interesting little formation. When you see a market just go flat and die, and then it breaks down, it puts itself in a little intraday range. We could probably see that on the 240. And there, it puts itself in a little range, very small. It's not facilitating trade. And then, boom, it appears to break out of that range, then comes right back and jumps up. That makes bulls nervous. That's a neat little formation that you'll have to keep an eye on. We used to call that a Sparandio bottom, after Trader Vic Sparandio. When the market establishes a bottom or a top, and the bottom in this case, then it goes down, makes a new low, but there's no follow through, and everyone covers all at once. So you have to watch that. You shift it to our daily directional line back higher. You have to watch that weekend too, and I'm sure there's a lot of shorts here. So, and this is why we're recommending. Well, even in here we were saying, well, if you can sell it, you want to sell it intraday. We don't trust holding a position down here. You don't want to be short at these levels position-wise. It's just not worth the risk. Next market, dollar yen. I have to tell you, though, I'm pretty excited about trading, and we have a good time in our live market exercise with my clients, and pointing out setups and signals on the intraday time frames based on these higher time frames in live market. It's a lot of fun. It's a heck of a learning experience for me too, and I don't care how long you've been in this business, you're going to continue to learn. Here's a pretty good uptick here, and we've been pointing out all along, despite this sell-off, pretty hefty sell-off, good momentum, etc. This is a higher low to this one. This is the Jan low is a higher low to the Nov low. The Feb low is a higher low to the Jan low. And now the March low so far is a higher low to the Feb low. So very, very subtle pattern, could be telling in the long run. And they shifted the daily trend higher here. So you're up on the daily. So that may or may not green light intraday buy signals for the short-term trend traders. I tell you what, though, let me show you on a 60. This, I'm always leery when the market does everything on one number. So bam, it just went. It was a healthy move would be a rally, a pullback, bulls going again in the rally, and the pullback and they going again. I'm always leery of this. This is just one short covering move here. So it's not necessarily proven itself. You got to have some backup. You got to backfill and then prove itself. So yes, the short-term trend did reverse higher. You're in a big, nice range here. So it could just as easily go challenge 84 now over the next week or two as it could to go down to 81. So you're just flat. Your total counter trend now, well, not total counter trend. You're up on the weekly, down on the daily. So short term, you're in a counter trend market, counter trend environment. U.S. stock market, boy, this guy came back, didn't it? That's why I never have interest in shorting this guy. You get away with shorting stocks like once every 10 years or once every 7 years, and it's just a trap. There you go. There's the trend line. Did we say yesterday you don't draw a trend line with a sharp pencil? You draw a trend line with a crayon, because a crayon's going to give you a thick line there. Just a level with some depth to it, a support level with a little bit of depth to it. It's not one pinpoint line on a chart or price on a chart. It's more a band of support, and that's what trend lines are. So very shallow retracement here, and look at how quickly it recovers too. I tell you what, someone big came out of the market on the first of the month. You see the market down that sharply on the first of the month when generally you get inflows. The inflows held up a little bit there, and they let that come out. But I'm telling you, somebody big came out of this market right there, but the market came right back. So interestingly enough, you're below the weekly and still below the daily. So we've got to watch that. I want to show you the U.S. bond market. Because this is very interesting, and it will have its effect. Long-term bonds are heading lower. Interest rates are heading higher. Tough scenario to break the majors out, and that's why I'm backing off on that Aussie and that pound. The last couple of days, I'm like, count me amongst the bulls. I have to back off on that. Now, if I get the intraday conditions, it really doesn't matter what I say today. If the conditions are in place tomorrow, based on market environment, based on price pattern, momentum, and structure, we'll do what we do, regardless of what I say now, or regardless of what I even think. I mean, it's just pretty much mechanical. However, this I have to have in the back of my mind. U.S. interest rates are going up. So with rates going up like that, it's going to be tough for those majors to continue to motor higher. It's going to be supportive of dollar pairs, supportive of the U.S. dollar overall. So this is what we're keeping an eye on. To me, this is bigger than any monthly unemployment number. But that's going to be interesting, the number tomorrow. I think we're finally going to see a really good number. Actually, we saw a good number 2 or 3 back, didn't we? But, the market's anticipating a pretty good number. Certainly you see the stock market up that much the day before. It's telling us something. So, hey, we'll have to see. My name is Jay Norris. Thank you very much for attending the report. And I'll be back with you Saturday for the weekly wrap-up. We take Fridays off. Trade in the morning and close the shop early on a Friday. Hey, thank you very much, and check us out. Check out the weekly report over the weekend. Thank you very much.